Today's our guest is Robert Preston from Climb Capital. Welcome, Robert.
Hey, welcome. Thank you for having me.
Sure, thank you very much, Rob. A little bit about Robert Preston. Robert is a co-founder of Climb Capital and specializes in residential commercial real estate. He searches for and acquires value-add B and C class properties that produce a durable yield through the life of the investment. Has a proven track record of using private money to fund real estate investments. His previous single-family home rehabilitation experience gives him the needed expertise to manage contractors, subcontractors, and materials for multi-unit rehabilitations. Robert's years of experience as a rehabber and landlord combined with his 14 years of experience as a Marine Corps officer provides him with the leadership and discernment necessary to be a highly effective asset manager. And now your Robert is focusing on mobile homes and RV park space. So with that, Robert, you want to add anything to your background?
No, I think that was pretty thorough. It sounds like I probably need to update my
Uh,
website bio.
sure, absolutely. So how did you get into real estate and multifamily and mobile home park space and RV park space, Robert?
Yeah, so my story, kind of in a nutshell, I graduated from Clemson University with a degree in economics, and then post college, immediately went into the Marine Corps. I was trained as an Osprey pilot and spent about 14 years there flying the Ospreys. And my second deployment, I was in Afghanistan in 2012 and doing some pretty cool flying, but also some pretty dangerous flying and getting shot at a lot. And wanted to make some life changes there, and made some major life changes, both in my faith and my marriage, and then third was maybe finding a better way to make some money. And so I came back from there. Really started out as wholesaling single family houses. I didn't really have any real estate background or expertise. I started wholesaling houses, and houses led to flipping houses, and then that led to buying rental property, which our first one happened to be a small mobile home park. So learned about commercial real estate, paid for some tutoring and education and mentorships, and simply grew from there. So mobile home park led to 60 unit class C apartment complex and some office buildings, and then continue to progress through there. And so from 2015ish to really last year, 2021, we were buying a lot of class C apartments, renovating them, fixing them up, repositioning them. And the intent was to hold them, but we ended up selling a good number of them last year when the prices were pretty high. Um, but we also noticed around 2020 timeframe with eviction moratoriums and all the issues that came with COVID, and then the change of interest rates, and we also noticed a ton of investors pouring into the market. There really wasn't any deals that we liked anymore, and we were having a really hard time finding quality deals that we didn't feel were overpriced. And so coincidentally, we had bought our first RV park in early 2020, and that turned out very well for us, and we learned a lot through that. I also became a RVer, so I'm in the RV right now with a family, vacationing and working. And so sort of fell in love with that as a lifestyle and as an asset class. And so slowly, as we learned, we gradually pivoted to now at this point, 2.5 years later, we are essentially fully targeting RV parks. We still hold some multifamily portfolio. We still hold some mobile home parks, but right now we're really focusing on buying and operating RV parks as of today.
Got it. And thank you for sharing your background. So you have some economic background also. So what's your
Sure.
take on current economic situation? How do you see commercial real estate space next, maybe 6 to 12?
Sure. Yeah. So if I had all the answers, we probably wouldn't be talking, right here. I'd be off doing some other things. But there's a few factors that are obvious, and they're um, that we can't dispute, right? And one is the amount of money that's been printed over the last couple of years, or that has flooded the market. So inflation will happen. It has to happen. There's just no way around it. until that money continues to trickle out and stabilizes back there. So we're going to know and see and expect prices to increase for rents and for purchase prices. That's obvious, despite what the interest rates are going to do. It's a good attempt, but you just can't simply add that much money and things not change. However, on the housing side, if you look at it by decade, right, generally every decade, we have to produce around 11 million new units, housing units per decade. And so from 2010 to 2020, we basically produced 6.5 million units there. And so there's a simple supply shortage as well. That is, despite pricing, we don't have in a lot of areas, particularly where I live, there simply are not enough houses. There are not enough housing units, period, despite the prices. And so that gives me a little more reassurance and comfort in the fact that there's a simple supply and demand from a unit type there. The prices obviously will fluctuate, the market's going to fluctuate, rates are going to fluctuate. So I don't, to tell you what I think is going to happen 2 years from now, I really don't know. To be blunt, I don't care, because there'll be great deals to be had in any market. And the space that we like, we feel is very insulated and protected from market fluctuations, that we can benefit from an up market and a down market. And I can kind of go into those details, but I'm just watching and seeing what's going to happen, and then we'll adjust from there.
Got it. Yeah, thank you for sharing your perspective also. So yeah, let's jump into the mobile home park space or RV parks that you are focusing on. So
Sure.
what kind of systems do you have in place for managing different kinds of aspects of RV park space?
Yeah, that's a really great question, because it is one of the barriers to entry. It's one of the reasons that there are not a lot of people in the RV park space, and thus that means there's a lot of opportunity to find really great deals at the purchase, so that we are still buying 10 to 12 cap properties at purchase. And the reason is because it is a relatively unsophisticated, undeveloped asset class. There are very few third party property management companies that will manage an RV park. There's a few software systems, but none of them are very sophisticated or coherent through the whole process. So as an example, we use CampSpot for our reservation booking systems, and it's pretty good from the customer interface perspective, and good at the reservation management and marketing perspective, but it has almost no accounting features on the backside. And so we essentially have to use CampSpot for our front side facing customer interactions, and then the data is then exported into QuickBooks, right? And so we're doing CampSpot to QuickBooks, and then neither of those have a good maintenance schedule, maintenance request program, like you would typically find in a multifamily investment software. And so in multifamily software, you have the AppFolio, the rent managers, a bunch of the other ones that are pretty A to B, A to Z, that provide you all of those systems. In RV parks, that doesn't exist. So we're using a hybrid of those. It's one of the things that we're actually looking to develop in the future, would be a standalone, fully integrated software system for operating RV parks. But so we use a combination of those 2 or 3 systems right now.
Got it. Yeah, thank you. So how are you managing these RV parks? Are you self-managing?
Right. Yeah. So going back to that first RV park we bought in 2020, that was the first property that we self-managed. So prior to that, we had been using third-party management. Honestly, we're pretty frustrated most of the time with their performance. We went through a lot of apartment complex managing companies, and we started with our first part, we started self-managing. And then as we learned and grew, we moved to self-managing all of our apartments now, and all of our mobile home parks, and all of our RV parks. So we had to create our own property management company. So we have a subsidiary of Climb Capital that manages all the parks. And so inside of that, we have around 30 employees now on the property management side.
Got it. Yeah, thank you. So, what are the challenges you guys face when building property management company?
Yeah, good question. So at the end of the day, if you probably talk to any business owner right now, their most biggest concern and hardest thing to tackle is finding good people and finding good people to go to work. So by far that is the biggest challenge. What we're doing is not that complicated. It's not that hard of a job. It's a mix between property management and hospitality customer service. So we had to find great people. And so we took a little bit of a different approach there to accomplish that. And instead of really looking for history and experience of property managers, we targeted individuals that would probably want to be future owners. And so we are really looking for character traits and ambition and drive versus property management experience. And so as we go out and look for our next, property manager, we craft the ad to kind of cultivate the idea of, do you want to learn how to run your own business? You want to be developed, etc. That's where we're targeting. And so it's been very successful. The people that we have in the organization are very self-driven. They have an ownership perspective. They're always looking to increase the NOI for us. So it's worked out well.
Got it. Awesome. And from asset management point of view, like what kind of KPIs you're tracking for, especially like RV parks?
Yeah, so we track, obviously we're tracking occupancy from a pure unit count. We track the weekly income, and so that fluctuates based on season retail. We track, we have some Airbnb cabins in every property, so we track that as a different line item of income. And then we have a monthly rental income line. And then we also track our reviews. It's a big one. Our Google reviews and Airbnb reviews is a good KPI for us on how we're doing. Of course, your general expenses and stuff to make sure that we're keeping a good expense ratio and a solid NOI. But yeah, we're really looking at income by the week, by the year.
Got it. So you basically you are tracking every weekly, right?
Correct. Yeah. So we meet every week, and we go through the weekly income based off of the retail and off of the monthly rentals.
Got it. So are you facing any kind of challenges in tracking KPIs?
Yeah, we are, and that goes back to my first statement. There's not a lot of sophistication in the software, or even in the market in general. So finding comps, finding what the market rate is much more difficult in RV park investing than it is in multifamily. And so it's a lot, there's not a CoStar really that provides that type of data that you would normally get for apartments in our parks. So a lot of it is just manual, getting on the phone, calling other parks, Googling, searching. That's a bit of a hindrance. And then of course the financial software is not automated like you would find in multifamily side of it.
Okay. So what other parameters you're looking when you're sourcing or finding deals or underwriting, RV park deals?
Yeah. So our buy box is relatively simple, right? So we are looking for properties that are south of the freezing line. So kind of Sun Belt is what we call it. And then for us, it's Arizona and east, specifically Gulf Coast. We really like the Gulf Coast. That's where we live. It's a lot easier to get to. So that's our geographic region. And then we're looking for parks that are pretty close to interstates and exits, or major highways, but ideally interstate exits. Roughly about 100 pads, 100 sites or more, that have some amenities and stuff. And then typically, we're looking for in-place cap rates of 8 or better. A lot of times we're in the 9 to 12 range when we're buying parks. there. A lot of parks have a lot of excess land that we can develop and build out more sites. The capex there is pretty low because we're really just moving dirt and providing utilities. And then the maintenance obviously is pretty low too because we're not owning much more than the dirt and the utilities. So does that kind of answer your question?
Yes, absolutely, absolutely.
Okay.
And like, how are the lending terms with RV parks?
Yeah, so that is another challenge, another hurdle that's probably prohibiting a lot of guys like you and other guys to jumping in there. Um, the lending markets have improved dramatically over the last 6 months. A lot more banks are getting into this, a lot more institutions are getting into this, but presently there's no major, Fannie Mae, Freddie Mac product that works here. So we utilize a combination of regional banks, credit unions. There's a few debt funds that are specific to RV parks that we have connections with there. And over time, we're just building relationships and trying to develop a product from like Citibank to be able to have a non-recourse institutional type debt there. But a lot of it is full recourse. A lot of it is kind of your traditional commercial bank.
Got it. Yeah, thank you. And during our offline chat, you mentioned you're purchasing one property in South Carolina markets. So would you share a little bit more about that property and how exactly, what kind of structure you're going after that?
I'm sorry, was that the South Carolina one?
Yes.
Yeah. So, excuse me. So we actually closed on that property a couple weeks ago. It's an interesting property because it's on Lake Moultrie, which is outside of Charleston, South Carolina. And it used to be a KOA, then it was bought by a owner operator, an older couple. They're gotten well into their age and really haven't been able to run it very well the last couple of years because of their physical condition, but they wanted to owner finance that one. So we made an offer. It was a little bit less than they wanted. They took it, and then they volunteered and said, "Hey, we'd really like to owner finance this." And I said, "Excellent." So we did. So smaller property is $2 million purchase price. They've financed 1.3 million at 4.5% interest on a 10-year term, 25-year amortization, I believe, or no, sorry, 30-year amortization. So really great terms, especially in this market. 62 pads. Most of them are waterfront. There's 3 boat ramps, 24 boat slips on the water, Lake Moultrie. So we're in the process of getting that turned around and remarketed, rebranded, and that'll do very well for us.
Got it. So any interest only period?
No, we just did a straight started the amortization
Okay.
on that one since it was relatively small and they provided that financing. So
Got it. Yeah. Is that 60 LTV? Around 60 LTV?
yeah, that's about right. Yeah.
Okay. So would you share any of your best real estate investing experience so far?
Best ones.
Yeah.
Let's see. So we bought that first park we went full cycle and we sold that one. So I bought that one for $575 in February of 2020. We did almost no capex. We did some repairs. I think we had $20,000 into it, and we sold that of February of this year for 1.2 million. So that was a nice turnaround.
Yeah.
But so financially, that was great. We've had a couple other deals very similar to that on a larger scale. But I think so far my best experience has really just been pivoting to an asset type that I can be the customer for as well. And so I get to travel now with the family, and they think they're on vacation, and I'm actually at work, we're working on the parks, and they're out there playing on the playground. So I think that's by far the best experience, is really falling in love with an asset type instead of the apartment complex, which I generally not going to take my family to. So that's really been a great experience.
Awesome. And would you also share any challenging experience?
Yeah, absolutely. So 2020 was challenging, no doubt, with a lot of our apartments, multifamily was Class C, And with that eviction moratorium, and then people just decide they don't want to rent, and then it just became really challenging, honestly, just from a financial perspective, and also became challenging just from a mental perspective, where we knew we had people who had jobs and that were making income, and they just chose not to pay because their neighbors weren't paying, and there was a lot of hardship. I understand that, real hardship, but there was a lot of just people deciding they weren't going to pay because the government said they didn't have to, and that honestly made me pretty jaded with the multifamily side of just the lack of character, I think, that a lot of potential tenants have in that space. And so that's one of the reasons it's a bit of a lifestyle change too. Just decided that it's a lot easier to deal with the tenants who are pay me before they arrive and are happy to be there and happy to leave, and they're on vacation. So so I think that was a really challenging time.
Got it. Got it. So, any of your personal habits that are helping you to be successful?
Yeah. So I say this several times, like, I'm not the smartest person um, in real estate, but I'm pretty determined. And so, coming up as a Marine Corps officer and 15 years of that and flying, as a pilot, you can never give up. You have to continue to fly that aircraft all the way to the ground, even if it's falling apart or on fire or the engines are there. You have to continue to fly it all the way to the ground. And so being persistent and having a lot of grit, I think, has really helped me and the company continue to push through the hard times and not give up. And generally, when you do that, in the backside of that, if you just don't give up, it usually turns out pretty well. So that's I don't know. That's a good question. I don't think I've been asked that one before.
Yeah, absolutely. Great answer. Yep. And any books that impacted your life and what way?
Sure. I would start with, of course, for me, the Bible, right? That's kind of my foundation, or is my foundation. Um, but real estate wise, the big one, of course, is Rich Dad Poor Dad. That really changed my psyche. But I've really appreciated recently a couple books written by Oren Klaff on mindset and negotiations and selling. Both of them are really good. One's called Pitch Anything, and then the other one's called Flip the Script. So I like those books. They help me kind of reset my mental thought process every time I need to read it.
Great. And share any one personal learning or personal decision that impacted your life.
Yeah. So for sure, particularly from real estate and economic perspective, I had a mentor. Her name was Diane Bowman. Um, she came out for 3 days in person, and we spent all 3 days just talking about commercial real estate and teaching me and helping me. And honestly, from that point forward, I've learned a ton since then. But that was kind of the push or the nudge I needed to feel really confident about going forward and making deals.
Awesome. And how are you giving back to community, Robert?
Yeah. So um, I like this question, but it's sort of hard to answer sometimes. Um, so my wife and I are foster parents, and we really have a heart for orphans and people without parents. And so we're foster parents. And so I say that because it is obviously a way of giving back, and we enjoy that. But the reality is, like, we get so much more out of that than we do. We've adopted a son. We're working on adopting um, a daughter. But at the end of the day, it's like we don't feel like we're giving them any favors. It's just having them in your life, and seeing them grow and seeing them thrive is just far beyond rewarding than you can imagine. So I don't consider that giving back, even though maybe that's what it is. So that's kind of our passion. A lot of foster work and stuff for kids that don't have parents.
Got it. Awesome. And how can listeners can connect with you?
Yeah, absolutely. So our company's Climb Capital. So it's climbcapital.com, which is CLIMBCAPITAL.com. So on there's in-doc form. We can schedule a one-on-one meeting together. Of course, we're on Facebook, LinkedIn, Instagram. My email is robert@climbcapital.com. And of course, there's info@climbcapital.com. So all those are great options. We do have a fund, $20 million fund that is open for accredited investors right now. And so we're happy to talk about that as well.
Awesome. And thank you very much, Robert. Thank you for sharing, RV Park's experience and some your own personal best and challenging experiences as well.
Thank you for having me.
Sure.